Well, we're just, in fact, less than a day away from budget. Let's also figure out how market experts are placing their bets. We have Sanchita Mukherji joining us on the show to talk a bit about the fundamentals of the market. Sanchita, what is making you bullish on the market at this point of time? How is it exactly that you're navigating a market full of uncertainty, volatility, so many triggers taking place simultaneously on a global and local level?
Thank you so much. Yes, we do live in very exciting times, don't we? So budget tomorrow, it is expected to be the big event run up to the elections 2019. I do not expect the government to go overly populistic because they never have done previously so. But having said that, yes, a budget will address the agricultural distress, the fact that procurement hasn't really happened since the last budget in spite of the MSP formula changing. There will be some expectations on the direct tax, on certain structural reforms in agricultural as well. But having said that, yes, I think February, March, April would inculcate a lot of volatility in the market run up to the election. It's so close by. But I think it's a great opportunity for investors to look at allocating, changing their sectoral allocation and make use of this volatility to invest into the markets given a very longer term horizon. You know, in equities and asset class, you cannot be invested for a short term. It is not for the faint hearted, but given a long term perspective, it is a great time to use this volatility as your friend. Having said that, the reason why I'm bullish long term, not short term. Short term, I'm very cautious on the market. Long term is because, you know, we are again one of the few economies which are growing at a 7% plus. If one were to look at the earnings recovery, you know, the earnings have been overall stable to a little weak from the net profit perspective. But having said that, the top line growth has been 20% upward, 26%. There's a lot of hope that we derive from the financial services sector, you know, where the numbers are coming out now, which clearly shows that the asset quality has been improving. So by the third and fourth quarter, I would see a remarkable asset quality improvement and profitability on the financial services. Also the fact, you know, a lot of consumption driven stocks have rallied last year, but the industrials and capital goods haven't. So that has been clearly a bear run on the industrials and capital good. But the efficiency of capital,
Sanchita,
the capacity utilization have increased. So I'm very bullish on that as well.
Right. We'll discuss the sectors in detail, but you know, you just mentioned about being positive on financial space, that the fact that the asset quality has been improving. Are you referring to banks? Are you referring to NBFCs as well, or HFCs? Any particular sub-segment that you specifically like at this point of time?
Yes. So when I talk about financial services at large, I would stress on the fact it would inculcate private sector banks, it would inculcate corporate lenders, certain high quality NBFCs and HFCs which have been doing really good business. Again, in pockets one has to evaluate them. It cannot be all encompassing from a sector point of view, but good quality NBFCs, HFCs, corporate lenders, general insurance companies, wealth management firms are slated to do very well. So I would be bullish on this sector at large, yes.
Bets, you know, auto ancillary, it's a space that everybody has been completely negative on. There's been massive selling that we've witnessed, not only on OEM side, but even auto ancillaries, tires, all sorts of things related to the auto space. What are you betting on within this space? How is it that you seem to be positive on it despite so much concerns in the market?
So I'm not positive on just the auto ancillaries as a subsector. I'm positive on consumer discretionary taking off would remain to be strong despite concerns on auto sales in terms of specifically auto companies. If you were to witness the FMCG volume growth, that has been phenomenal. Also, what has happened is the demand has slackened off a bit in the last 2 quarters, which has affected retail, consumer durables, auto and auto ancillaries. Now, when we are talking about auto ancillaries, yes, the companies have not been able to pass on the pricing power to the consumer because the commodity prices were high. But that is not the situation in today's date, where commodity prices have clearly come off. So I think consumer discretionary, which would mean your auto, FMCG, consumer durables, in fact, once we see the demand improving a little bit, the earnings uptick would be phenomenal, because there again, there's a lot of operational and financial leverage which will come into play.
Right. Sanchita, thank you so much for making us understand the sectors, the pockets that you are looking at this point of time, and your overall view on the market continues to be quite positive on the long-term horizon. Thank you so much for joining us once again. Let's